manipulations end badly. You can only suppress a price or manipulate a market for a long extended period of time by pushing it in the direction that it is going. And if it starts to move the other way and you're still trying to cling to the same program.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
The long end of the curve is not controlled by the central bank. The long end of the curve is the 10 or the 30-year would be all about the bond market. The bond market itself, who it's basically saying that, yes, there will always be demand for these treasuries, whether they be in the United Kingdom or in Japan or in the United States, but at what rate? And the bond market, I think when at least here in the United States, when we try and talk about rate cuts and pushing down the front end of the curve, I think you'll see something similar. We saw it already. What happened several months ago when they tried to lower the short end by 100 basis points? The 10-year went up almost exactly the same amount. That's what we're seeing. We're at the end game where there's so much debt out there that rates have to go higher to compensate for not only the poor performance of the currencies, the underlying currencies, but also for, the interest rates that we're getting paid on the yield on the treasuries that you're buying due to inflation and devaluation, if you will, of globally of the value of the currencies that it's valued or that they're valued in. So I don't know if I made that very clear, other than to simply say the bond market is more powerful than the central planners. And especially at this late stage game where it's become very obvious that these countries want to inflate their way or print their way out of the problem. And the bond market is saying, you're going to have to pay a much higher rate of return in order for us to accept your bonds, is one that continues to move up gradually, kind of like what we're seeing here. I would argue the difference right now between this market and ones in past is the corrections. The corrections are nowhere near what they were before, where you would see a correction and the price would get stepped on and go lower and lower and lower, wouldn't come back, like in 2011. The corrections that we are seeing now are very shallow. While they can be steep, they don't last very long. Then the price comes right back. That is an underlying reality of physical demand at the highest levels. What's unusual about this one is the price. If you would have told me gold would be at $3,500, and most people wouldn't know a gold eagle if it fell on their foot, is shocking to me, which tells me we're very early yet in this bull market. But a price that continues to move higher without gaining any attention, to me, is very bullish, because it's the biggest money in the world that is pushing it higher as the public is moving it completely and totally lockstep in the other direction. It's, to me, very, very bullish, and a contrarian indicates, and then you really get prices moving in a vertical parabolic fashion. Nickel's a good example, except they basically reversed all the transactions, and as far as I'm concerned, LBMA lost all credibility when they did that. But that's what happens when you mess with Mother Nature and you suppress all of these things for, ill intent. The markets need to operate freely. Free markets seem to find equilibrium where they should be. When you suppress the freedom in free markets and allow these distortions to happen, that's why all manipulations end badly. You can only suppress a price or manipulate a market for a long extended period of time by pushing it in the direction that it is going. And if it starts to move the other way and you're still trying to cling to the same program that you've done in the past, that's when things get very dangerous. And that's where we are right now. I would argue that will end badly, and you'll see prices go much higher. You'll see, whether it be hedge funds or commercial banks, go under as a result of their stupidity to short all of these. It's an existential threat. One could argue this is what put Bear Stearns out of business. So to me, you just play the long game, and it's been a long, arduous journey to where we are now. But if I would have told people, a year ago that we'll be staring at $42, in early, mid 2025, I think most people would have been happy about that. Quite frankly, I think it's just beginning. We're a long ways away from seeing where this ultimately stops, but this is where it should have been a long time ago, and I think it's still got a lot of room to run based upon everything that I'm seeing, whether it be anecdotally or economically, or just by the movements of the biggest players in the world with Russia and India and Saudi Arabia and China. They're all gobbling up silver as fast as they can. Evidently, so are the folks in the United States now, too, at least on the COMEX. When that translates to the retail side, which I believe it will, something will wake up the public, that's when we'll see real fireworks. And of course, we're not there yet, but that's a benefit to all of you who are trying to add to your portfolio. See 8 Western banks, and I'll talk about Ed Steer's chart again that you showed several months ago. When you see 8 Western banks that maintain the largest concentrated position of any commodity ever traded on COMEX, it's not to hold down the price. Well, it is, but it's not price that's bothering them because silver is inelastic. You don't need a lot to make a very expensive item. Even if it's 500 ounces in a Tomahawk cruise missile that costs millions and millions of dollars, or a fifth of or a sixth or an eighth of an ounce in an iPhone, the cost of the finished product is so much higher than the little incremental price of silver. It doesn't matter. More along the lines of they've tried to step on it because rising price would attract demand, and there's not enough availability of it. The price has been skewed by the trading on COMEX and the LBMA. It's real value skewed, and so I think the rising price would attract investors, speculators. They don't want that. It's more along the lines of being able to access stockpiles of silver rather than the cost of the silver. I know that sounds kind of strange, but if you're making it for all of these critical components, it's less about the price and more about the availability because it's used in such small amounts in whatever the finished product is. But you're right. It has been suppressed. It has been held down. It has been manipulated. And I think now there's a race to accumulate it because indeed it is strategic. It is critical. It is needed not just in electronics and electrical components, just about anything that conducts electricity. It is needed in military components. It is needed in medical devices. It is needed in so many places, solar panels, etc. And that plurality of demand, from monetary demand to military demand to industrial demand, makes it strategic, every bit as strategic as any of these other strategic metals. And I think that's the change, is that Trump understands it, his administration understands it. So, this is something I think that will continue, and there will be at some point, I see a battle between the industrials and the, or shall I say, the manufacturers, the producers who need it, and the investors. So you're going to get companies like Tesla and Panasonic and Sony and whatnot in a battle for what's available. As the hedge funds and the investors start to take the other side, they're going to battle, and it's about availability of a depleting asset. It's not as much about the price, but just about the availability. And you start to wake everyone up just like that. It disappears. And what is a shortage on COMEX spills into a shortage globally across the board into retail as well. Not there yet. There's still great values, but I see that happening as where this ultimately goes.
The SLVETF is supposed to be the easy button for silver investors, a way to get exposure to the metal without having to store it yourself. But behind the marketing gloss lies a ticking time bomb. Right now, the SLV is sitting on a 54 million ounce short position, the highest in 14 years. That's not just a red flag. That's a flare fired straight into the sky, warning that something is deeply wrong. Here's the catch. SLV is supposed to be backed by physical silver. But with that kind of short interest, the truth becomes impossible to ignore. There isn't enough metal to go around. The ETF has become a paper promise.
Silver futures are 41.59, so come back a little bit. Still up 87 cents. And so, we're beginning to see accumulation by the big money quietly start to translate into higher prices at a time when the public is still completely and totally asleep at the switch. Same thing we're seeing in platinum. That's kind of been quiet, but it's interesting because platinum and silver, which have both done very well, have now been reclassified as critical minerals by the government. And so it's almost like it's the Treasury preparing to stockpile again. We've talked a lot about platinum or silver and the shortage, but the Japanese guy who's the head of the TOCOM exchange has come out and said there's no platinum available in London or Switzerland, yet they're trading 3 million ounces of spot contracts deliverable per day. Well, that's also been classified as critical. So I would expect hoarding of both platinum and silver. I think what the U.S. is realizing that these are national priorities. We've talked about that. Someone got into his ear and said, this is what the BRICS are doing. We better do the same thing. And then you look at the way that some countries are reacting right now. As right at the same time U.S. declares silver as a national priority, you have Saudi Arabia buy a bunch in SLV. You see India's demand of silver is up 431% year over year in May, and record ETF inflows in June despite higher prices. So yeah, I mean, there's a lot of demand for physical metal that hasn't translated into the retail side of it yet. But the rest of the world, the big money, whether it be on the exchanges or the central banks or the sovereign wealth funds, are making it very clear that silver and gold are quite significant, and platinum, to their